From Kansas State University, this is Agriculture Today. Eric Atkinson with you. Coming up today, K-State's Glynn Tonsor on the cattle markets. He'll break down the unexpected numbers from that USDA cattle on feed report last Friday, and he'll draw from a new study he's involved with on the impact of regional reliance on large beef processing facilities. Then K-State's Dale Blasi on the findings of his research on mineral supplementation and growth implants for stocker cattle heading to grass. He and colleagues have measured the growth response to each of those practices and the economics associated with them. And on this week's Wildlife Management segment, K-State's Drew Ricketts on the decline of wild turkey numbers in Kansas and some habitat management steps you landowners might consider. All that here on this Agriculture Today. You're tuned into Agriculture Today, our Monday edition. Thanks for being along with us. To the cattle markets we go, as we usually do, to open the week. Plenty to talk about there, to be sure, on the heels of a surprising USDA cattle on feed report last Friday. We'll get into that and more now with Glynn Tonsor alongside, livestock economist with K-State Research and Extension. But first, the general recap, Glynn, of last week's trade, futures as well as cash. Maybe a bit of improvement, but not overwhelming.
Yeah, overall flat to slightly up across weight class, depending on where we be calling the market. Let's just do the cash market first. AMS called the fed cattle at about 140, 141 a couple times here for Kansas. It's a little higher than that in the Nebraska area, 144. One of them I wrote down was 145 as the week closed. That's a little bit stronger than on the board. So April live cattle was 142. That was up about $2 for the week. We flip over to feeder cattle. The Pratt market on Thursday was $2 to $4. There's a couple lots that were every bit of $5 higher. Not a lot of volume, which isn't necessarily surprising, but the two lots I wrote down for context is one lightweight 400-pound lot, 88 head, sold for $232. We definitely weren't talking those prices a couple years ago, is why I bring it in. And that was one of the larger lightweight lots, so I'll share that. And then on the higher end, a lot of 62 head weighing $693, sold for $172. Those, again, would be a little bit higher than the week before. When you look at the board, April feeder cattle's 158, flat from the week before. Add into this the cutout. Choice cutout closed the book on Thursday. That was $270. It was down about $2 from the week before. Similar. Select was down about $4 on the week. And my last comment, just to kind of round out, how the week went, was the system was full. So processing initial estimates through Saturday were 665,000 head. That's exactly what it was a year ago for the same week. That's a full 30,000 head ahead of where it was the week before. So year-to-date cattle slaughters up about 0.5%. I think we'll see, now I have been saying this like 2 months, we got to be getting close to where we're going to see that to start to taper off some. This will lead into the cattle on feed report a little bit, but the year's sort of front-loaded. The year has been full. And as we're going to talk about here in the cattle and feed report, there's more animals in the yard per that report than some are thinking.
It was a rather tranquil trading week this past week, but you bring it up, the USDA's cattle on feed report. And you'll dig into the numbers here, but that placements figure is what turned heads.
Yeah, the placement definitely did, but with that is the on-feed is higher than expected because obviously that feeds into that. The on-feed for April 1st came in plus 2%. That was notably stronger, so about 0.3% was expected, and nobody was expecting the full 2% growth. Now, that was driven by the March placements, as you said. March placements came in flat, where all pre-report estimates were having it down. The actual number was well outside the whole range of all the pre-report estimates, notably higher than expected. I should interject here that April 1st inventory is the highest on record since this series has started since 1996. And then the last main national number we'll hone in on is the March marketings came in 2% down from the year before. That number was not a surprise, so that's right in line with what was expected. So marketings as anticipated, placements were quite a bit larger than anticipated, and with that, on-feed inventories to start the month of April were up compared to what we were thinking going into the report.
And that, in interpretation, would be a bearish report, but bearish to what extent?
Yeah, so in the near term, it would definitely be bearish for live cattle prices, to be clear here. So anything in the next 3 to 6 months, this report is not optimistic for that. But underneath this, I think, is some examples of cattle being pulled forward for various reasons. A lot of that's probably a combination of, weather and feed cost and so forth, not just in the feed yard, but on the home ranch are all part of this. The markets are working there. Thinking through that is I do think this is bearish in the near term, but it may not necessarily be bearish when we look out, 8, 9, even 12 months from now. That doesn't help anybody that's got cattle in the feed yard right now. I'm well aware of that. But in a repeat game, so to speak, this does set the stage for, I think, a much tighter supply story forward throughout 2022 and certainly into 2023. The other level of this is, Kansas specifically,
Yes.
It does stand out a little bit in this report. So everything I've talked about so far is the national numbers, but things like basis patterns and so forth become region-specific pretty fast. So what was Kansas compared to the other two largest states? Nebraska and Texas is what I want to walk our listeners through. We start April 1st in Kansas up 1% on inventories. That's actually a little smaller than Nebraska and Texas were up 3%. Okay, so there's one distinction. But the real distinction for Kansas is the March placements and marketings numbers. March placements and March marketings were larger in Kansas than they were either Texas or Nebraska. And we don't normally see that. I didn't go through the record books to see if it's happened before. It may well have happened before, but it's definitely not the norm. Texas and Nebraska typically have more animals in their feed yards than Kansas is part of that. So there's definitely a north to south difference going on here. Nebraska was 7% larger placements in March compared to a year earlier. Kansas was flat compared to a year earlier, and Texas was down 6%. When you look at the marketings in March, Nebraska was up 8%, Texas was down 9%. So there's a big difference between the states that are larger than Kansas, north and south of here, Kansas falling in between. I think there's going to be a lot of chatter on this being a surprising report, and then the subsequent component that's going to be notably distinct state-by-state differences that I think the market's going to take some time to absorb.
Now, this kind of information, of course, factors into your regular updates on feedlot returns, although the figures that you have in your notes this time around don't include this fresh news on cattle on feed out from the USDA. But it's been anticipated that the profitability was going to wane as we got closer to summer, and the numbers depict that, you say.
Yes, and this cattle on feed report will drive that story a little stronger, I think. Yeah. So for those that aren't familiar, monthly I do this update, and you can go to agmanager.info and find this. The numbers I'm going to share here were as of April 18th, and as they are noted here, they were pre this cattle on feed report. For quick context, I was projecting for the month of April a positive return of $37. Looking out to June was plus $29, and that's when the story changes. So every month from July through November are projected losses. And what's really underneath that is notably higher cost of gain. So the cost of gain that's underneath that is in the mid-120s to the upper 120s. And yes, fed cattle prices are ahead of where they were the year earlier, but not enough to offset the combination of higher cost of gain and the fact that there's more being paid for the animals coming in the feed yard. Mm-hmm. So the three-legged stool, the feed yard, obviously the operators are well aware of that. I put out the break-even numbers in the same report. Folks can watch that. But the break-even prices for fed prices approach 150 as we get closer to the end of the year, and we may well hit that. But at the time I did this for April 18th, coupling those futures prices with historic basis and so forth, we're not projecting high enough of a price to offset those higher cost of gain. And again, that was pre this report. So if you put a bow on that, the front half of 2022 still looks like it's going to be a profitable for an average cost producer in the feedlot industry, but that story changes sometime in the summer, and this exercise, the month of July, is when the profits turn into losses. This report will magnify that if nothing else changes. Improvements on cost of gain could go a long ways. So there's a lot of uncertainty in the grain space. My colleague Dan O'Brien's on weekly. If we have something that improves things on the grain front, this story could change, certainly in the favor of somebody that already has cattle on feed, because anything that would ease those higher cost of gains that, I'm projecting the upper 120s, there's chatter about some that are quoting 140 in the countryside. That's definitely pressuring these margins for the sector.
Finishing with this, Glynn, you've contributed to an article that looks at the impact of, as you term it, regional reliance on large beef processing. It's a food policy paper, and we won't get into the particulars of it today, but there are some thoughts that you've brought to the table here that are worth contemplating on that topic.
Yeah, so this is work that Lee Schultz, that's on regularly here from Iowa State, my colleague there, and Justin Bina, a PhD student working with Lee and I on this project. We're taking what we observe, USDA reports federal inspected slaughter data, and I quote that at the national level when we do year-over-year changes, but they do that at the regional level, and we also know the presence of large facilities by region. So we can understand how different regions vary in their reliance on larger facilities, and if the pattern of disruption early in the pandemic of running those slaughtering facilities differed by reliance on large facilities. So the data enables us to do that. That's what we do. And in this report, basically we find a 2-week period early in 2020 where regions that are more reliant on large beef cattle processing facilities, they had a larger year-over-year decline, but it was contained to 2 weeks. Outside of those 2 weeks, we find no statistical evidence. I don't want to get too geeky here, but we find no strength to the argument that regions that rely on larger operations were more sensitive to pandemics. So all regions had to pull down, kind of regardless of the size mix is the way to think about that. I highlight that because it's a timely point. There's a lot of discussion about adding overall capacity. Some of that's well underway. It's not for me to say we shouldn't do that. That's not the point of my comment. But the real nuance of this assessment is the industry may not have been more sensitive to pandemic because it was relying on large facilities. So the move towards smaller facilities may not help as much as is sort of the default assumption. There may be a place for that in distributing them to get closer to certain operations or to, just geographically having them in different spots of the country for other reasons. But in terms of national sensitivity and robustness of the system, this paper would say relying on large entities may not be as bad as some just presume it is. And the economist me has to add to that. We need to remember why the industry's evolved the way it has, and economies of scale, and then the ability to harvest an animal lower per head if you have a larger operation, and ultimately being able to transform an animal into edible beef products in a much more efficient way is core to that. We need to understand why, and not just understand, remember why, because it's been documented. The industry evolved the way it did, and studies like this they need to be kept in mind. Is the point.
Yeah, this is important input for what undoubtedly will be a policy dialogue in the coming weeks, as a matter of fact. Where might one get a glance at this data?
So if you don't have an access to it, you can email me. This is what's called an open access article, so you don't have to be at a university that has access to the academic libraries. You can get to this. It's published in the Food Policy Journal. If you have an interest in this, you're welcome to email me and I'll get it to you.
Excellent. Tonsor at ksu.edu is how you reach Glynn in that respect. Always good work, Glynn. Thank you for the update. We'll catch up again soon.
Thanks for having me on, Eric.
Livestock economist Glynn Tonsor, K-State Research and Extension, on the cattle markets. And we'll be back on Agriculture Today. We're back now on this Agriculture Today as those of you who are planning to graze stocker calves here in the months ahead are readying to turn those out. Some thoughts for you before you open up the gates on that. Dale Blasi is a beef cattle nutritionist with K-State Research and Extension, and he's going to take us through the prospects of mineral supplementation and growth implants for those stockers prior to turnout as a potential means of improving those gains. And this is something that has earned not just a little bit of research attention here at K-State, you say, Dale.
That's absolutely right, Eric. Dicalcium phosphate prices have tripled, and from our research ongoing, our mineral prices have increased by well over $200 a ton since last year. So obviously this is something that needs to be addressed with everybody and maybe a little bit of insight in terms of approaching strategies that a producer can consider.
You have information here that gives us a clearer idea of whether these programs pay off. Talk about that research that has shown the impact on performance.
Well, back in 2018, and it is published in our Cattleman's Day 2018, we actually employed 3 treatments: a salt supplement by itself, just simply block salt, a salt supplement plus an injectable commercial mineral product, and then finally a complete salt and mineral supplement formulated by a former colleague of mine, Dr. Frank Brazel. And so we compared each of those 3 treatments head-to-head over a typical double-stock 90-day grazing season with these calves. And relative to the complete mineral, the salt by itself, those calves performed about 1/10 of a pound less than those calves provided the complete mineral and salt supplement.
So there is an advantage to consider there.
You do the numbers with 90 days and 1/10. That represents about 9 pounds of added gain that you use to figure out whether or not that particular process of using that mineral was a payoff for you or not.
Now, the other aspect here, if memory serves, was to then compare the supplementation to what one gains from a growth implant for those calves, right?
Right. And so in this very same study, what we did was we looked at 2 different growth implants, a Revelor G and a rail grow, and a control. And so in each of the pastures that had one of the respective 3 mineral treatments, a third of each of those calves received a different growth implant or a control. And what we determined was about 0.2 pounds per day response with the administration of either the Revelor G or the rail grow growth implant.
So that adds up to maybe a little more interesting return to investment here, it sounds.
That's absolutely right. And when you run the numbers, again, doubling it from 1/10 to 2/10, you're looking at an added 18 pounds of gain. Now you're starting to talk about some serious money. And if you utilize the information from our Department of Ag Econ with the beef basis software they have, that represents about a $20 bill after you account for the $2 for the implant and let's just say $5 for labor to actually get the calf caught and properly implanted.
As compared to, and again, you've run the numbers here through beefbasis.com, what you might realize from the mineral, that's about a $7.50 advantage there?
Yes, actually, you're looking at about $7 benefit, $7.50 benefit with the gain, the 9 pounds, and you multiply that by the value of gain of about $1.53 per pound. That's value of gain, so we don't confuse anybody. But you're looking at a return of about $7.50 with an investment of about $6.50 over the 90 days, and that's using a $580 per ton mineral.
You put all of that together, then it sounds like it's supportive of the mineral supplementation, but really more momentum behind the growth implant as far as deploying those.
Yes, absolutely, and I would recommend the use of a growth implant. I would also recommend, given the cost of our mineral supplementation and looking at several results from clipping of the plants that we have taken over several years at the stocker unit, the decline in quality of our double stock grass occurs sometime around the first or second week in June. So there's some opportunities. I can make an argument for not putting anything out for those calves mineral-wise the first 30 days or so, and then following up to meet their phosphorus needs and whatever you may have in there. The other thing from our clipping samples is that they are clip samples. They are not samples that are representative of what an animal selectively chooses while out on grass. And we know from a lot of our previous literature that calves actually select pretty good stuff. They know what they want, and as a consequence, the good stuff they pick is much higher in protein and everything else that goes along with it. So in the interest of trying to keep your break-even costs down and trying to harvest maximum benefit, I would throw out there for folks to think about perhaps delaying the mineral introduction, using salt, of course. Put your salt out there, give them that salt source, but then if you, depending upon the season, we don't know what our season's going to look like, if it's going to be incredibly dry, or if we do see some blessings with rain here over the next 30 days or so. But at the very least, have salt out there initially, and then based upon our clip samples to play it safe, maybe come out that middle part of June, and for the remaining 45 days have that typical traditional mineral that you may have used in the past.
Just to be clear, though, don't abstain from mineral supplementation. Have something out there at some point in that season, even if it is a short season double stocking run.
Right, and the 2018 where we used the salt by itself, it really was no different from the injectable trace mineral regimen that we use, the commercially available injectable trace mineral. But again, 1/10 pound behind those calves that had the complete salt and mineral supplement. And, using phosphorus levels in your mineral, everything we have used from Dr. Brazel and from our latest work looking at the inclusion of Bovatec and Biuret, I would go for not more than, say, a 4% phosphorus in your mineral. Don't overspend, don't overpay that. It's not necessary. Really put your money in the implants for sure, and we pray for dry matter from our timely rains that we're hoping for, but certainly have an implant on board for your grazing calves.
And as far as the minerals, and we've spoken about this, the basic strategy of making sure that there is intake and how you present that. These standards that we've talked about before are very much, if not more so, important here.
Yes, absolutely. And a typical mineral supplementation program is really calculated to provide 50% of the animal's needs. And that is all goes back to whether it's a 3-ounce or a 4-ounce prescribed mineral. If they're eating 5 or 6 ounces, chances are you need to put a salt block out adjacent to your complete mineral. They're probably consuming the mineral for the salt. I would have a salt block out there just to kind of take the gas out of the consumption if it's truly exceeding what the label is telling you they should be eating. And do keep an eye on the intake. And unfortunately, a lot of producers, they really think a good quality mineral is based upon consumption. The more an animal eats, the better quality of mineral it is. But actually, as I said, the 50% needs for the animal are what is intended to be accounted for with the consumption of that mineral.
Quickly, as a footnote here, Dale, you mentioned that you are looking at Biuret and Bovitec as a complement to mineral supplementation in new research. What's that about?
Yes, absolutely, Eric. And what we're doing with this particular study, it's a 2-year study. We got 1 year under our belt. We have interim results from that, and we have the second year that's coming up. But the original objective of this project was to try to develop a mineral for producers that are on the run and at best are able to view their cattle perhaps once a week. And we wanted to provide some supplemental nitrogen in the form of Biuret and also Bovitec, a rumen ionophore, to try to get everything possible in that small 4-ounce package to be delivered to those calves to try to optimize gain, especially when the grass quality falls off that first or second week in June. What we found from the first year is really no significant differences between the control or Biuret or the mineral containing Biuret plus Bovitec. However, we did see about a 10-pound improvement over control as well as the Biuret and the Bovitec. So, does that 10 pounds pay for the added cost of the Biuret? It would be a hard decision to make given the cost of our fertilizer and for everything associated under the current environment that we're dealing with here in the country.
You'll be continuing that work. We'll await more results emitting from it. But it comes back to, again, in closing here, Dale, producers having to economize at all stops with every aspect of their grazing program, and the mineral supplementation side, the growth implant side, these are important things to manage acutely here.
Absolutely. And purchasing, making the buy-in for your mineral and being committed to getting it out on a weekly basis and trying to cut corners when you can and minimize any potential impacts on animal performance, all that comes into mind, Eric.
You bet. Thanks for sharing this timely word right here, and we'll talk again soon, Dale.
Thank you, Eric.
Beef cattle nutritionist Dale Blasi, K-State Research and Extension. Some comments there on economically managing mineral supplements and the strategy and worthiness of growth implants administered to stockers prior to their grass turnout here soon. And we'll have more on Agriculture Today. Agriculture Today continues now, and for you, our weekly wildlife management segment. And wildlife specialist with K-State Research and Extension, Drew Ricketts, is Mike's side. This time, Drew, you wanted to pass along some basic guidelines on wild turkey management, in that it is the spring turkey hunting season in Kansas, right?
Yeah, that's correct. And we are really experiencing close to a range-wide decline in wild turkeys that's been going on for really 10 or 15 years. And it's enough of a decline that Wildlife and Parks has adjusted our bag limits for spring wild turkeys recently. And so this is something that Kansans and folks really from Kansas East are concerned about right now.
Right to it. Are there things that landowners can do in a practical management sense to encourage those populations to grow again?
There sure are. And, there's a lot of different ideas about why turkeys have been declining. If you're in an area where poultry litter is used as fertilizer, that is a big concern because that has basically started about the time that we started seeing turkeys decline. And so folks think that that's what's going on. Now, there's been a number of studies that have looked at that, and there has not been that link made. Personally, this is my opinion. It's not something that I have data for, but personally I feel that that's probably not a big contributing factor because that decline is occurring range wide for eastern wild turkeys and not just in areas where turkey litter and chicken litter is used as a fertilizer. What we can say, though, is that habitat seems to be the biggest cause for decline for turkeys. And we have a recent study that's come out of the University of Tennessee that's looked at this. And what they specifically looked at was nest site selection and nesting success for turkey hens and related that back to habitat conditions.
And where did they find the deficiencies that are creating the decline?
The main thing that they identified was the type of cover that was present at those nest sites. That was very important. So nest sites that were in pastures with improved forages like fescue did not have good success, and nests that were in what we would call early successional cover, which is really weed patches and those sorts of things. The more forbs or broadleaf plants that are present, the better those nests did. And then in the forest, the more low cover that was present inside of that forest, the better the nest did as well. And so what all that points to is a lack of disturbance to promote that early successional habitat. And, you know, in Kansas, we have a lot of forest that doesn't get managed when we're thinking about wildlife habitat. So tools like prescribed fire, coupled with thinning of those forests. I grew up in southeast Kansas, and sort of the dogma is an oak tree is too valuable to cut. And we have reached a point in time where really we do need to start thinning down some of those oak trees, because we don't have good cover at the forest floor level if we don't have sunlight reaching the forest floor. And so forest thinning coupled with prescribed fire, and then also prescribed fire of pastures that are close to forest cover where turkeys are going to nest is very important. And if you want to try and visualize this, what this study identified was the cover between 0 and 50 centimeters, or about, you know, from ground level to waist high, the height of a turkey is most important. And as that cover becomes thicker, both above a nest and around a nest, the higher the nest success becomes.
And even if we're not talking about heavily forested areas, those edges around any stream or creek, for example, can be managed similarly, can they not?
Exactly. Yep. And that's a very important distinction. We don't have to have heavily forested areas to have good wild turkey habitat.
You can always turn to extension information on wild turkey management. We have that available out of K-State, but this is interesting work out of Tennessee. Drew, thanks for reporting on it. Appreciate your time.
Thank you, sir. Thanks for having me.
On our weekly wildlife management segment, Drew Ricketts, wildlife specialist with K-State Research and Extension. And our time's away once more. Thanks for tuning in. Eric Atkinson here. This has been Agriculture Today over the K-State Radio Network.